to Connect. Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. Now first of all, a just general disclaimer. This video is only for education purpose. Please consult your financial advisor before investing and trading. Now first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the markets were under pressure. Nifty was trading in an expanding triangle. Bank Nifty was moving in a recently formed rising channel, and any dips should be used as a buying opportunity. So up to certain level, market performed on our expected lines. But on Thursday, we have seen that the market saw some severe selling pressure after RBI's FOMC meeting. Then on Friday, we have seen a counter rally, which would be considered as a piercing line on the technical terms. So definitely, the strategy of buy and dips played, but it played little later on the weekend. So definitely, looking at the Friday's candle, the momentum still indicates that, and the patterns also clearly indicates that at lower levels there is the support, and the bulls are trying to defend their levels at the lower levels. So friends, now let us go to the Nifty daily charts. We will try to figure out what is the pattern formed and what could be the trend. Now this is the Nifty spot level. It has been moving in this particular expanding triangle. Currently, as I said, on Thursday, we have seen a sharp selling pressure, and on Friday, from lower levels, Nifty has formed a hammer with a lower wick at the lower levels on the lower side. That means that there has been a buying support around the lower level mark or the swing lows, and it has ended on a positive note, specifically on Friday. So this clearly indicates that we might see this particular extension of rally, but a smooth upside rally could be seen only if Nifty breaks Thursday's high. So until and unless Nifty trades below Thursday's high, we might see some sort of selling pressure, or the bears might test those particular levels at the if Nifty rallies from these level. But looking at the RSI, it is in the comfort zone, and the hammer pattern, and hammer after a severe correction on intraday basis, it is at least a good sign. So we can say this is the first indication, and we might see the extension of rally in the coming trading sessions. So definitely the pattern is good, and still there is no deviation from the primary trend, and the primary trend is positive. So friends, now let us discuss the Nifty supports and resistance level in for the next week. The first support in the Nifty is placed at 21,629. Below that, the second support is placed at 21,448, and third support is placed at 21,352. On the upside, the first resistance is placed at 21,904. Second resistance is placed at 22,053, and third resistance is placed at which was a swing high of 22,115. So definitely these are the crucial supports and resistance level. And again, I would like to reiterate, and I would like to highlight that traders should follow first half an hour to 45 minutes range breakout for intraday trades in Nifty or on any indices. First, one should mark the highs and lows of at least whatever is comfortable to the trader of first 30 minutes or first 45 minutes high and low, and then trade accordingly in the direction of the breakout. If it breaks higher range, then one should go long. If it breaks the lower range, one should go short. But looking at this pattern, we feel that at least we might see a breakout on the upside. So one should be bullish at this juncture, and a dips should be used as a buying opportunity looking at the charts. So now friends, now let us discuss the derivative data of Nifty calls. You can clearly see in Nifty calls, the action was seen in 21,800 calls, 21,900, 22,000 and 22,100 calls. Now here you can see there has been a small drop in option premium. Implied volatility is in comfort zone. It is between 12.24 and 12.41. There has been rise in the open interest, but there has been some shedding in the open interest also, in particular strike prices of 21,850. Sorry, 21,900. So maybe uh, the writers of 21,900 calls are already or might have started already booking profits after the Friday's counter rally. So we feel that this rally could be extended in the coming trading sessions. And once Nifty closes about 21,900, then we might see a sharp rally towards 22,100 to 22,200 mark in the coming trading sessions. So looking at this particular pattern, we feel that on immediate basis, 21,800 is first barrier and second major barrier is 21,900. Once Nifty closes about 21,900, then there could be an extension of rally towards 22,100 to 22,200. And looking at this particular data, we feel that the data is bullish. Now, friends, let us discuss the Nifty put data. Now, here in Nifty put also we can see there has been a drop in the option premium. The implied volatility is slightly higher. It is between 14.32 to 14.99. There has been a rise in the open interest, rise in the volumes. But again, as I said, there is a drop in the option premium. Now, a drop in the Nifty calls option premium and drop in the Nifty put option premium is clearly indicating, if we combine this particular both data, if we feel that the traders are of a thought process that Nifty might trade in a range for the next week, because there has been a writing in the put also, so downside is also protected. So on immediate basis, 21,700 could act as a very strong support. You can clearly see the concentration of volumes as well as the open interest. If it closes below 21,700, then only there are chances that Nifty might drift down to the levels of 21,500 to 21,400. But looking at this particular data of Nifty calls and put, we feel that the range could be breached on the upside, because there has been a shedding in Nifty calls. So definitely 21,900 could be the immediate barrier. If it breaks and closes above those levels, then there are chances that Nifty might rally towards the level of 22,100 to 22,200 mark. Now, friends, let us discuss the Bank Nifty data. Now, this is the Bank Nifty daily chart. You can clearly see Bank Nifty has been moving in the downward falling channel, and it has formed a piercing line. Almost you can clearly see the Friday's fall was recovered or regained, most probably more than 60 to 70% of the Friday's fall was regained on of Thursday's fall was regained on Friday. So which is clearly indicates that the bulls are not ready to give up, and any sell off would be defended at the lower levels. So looking at this particular pattern, we feel that next week Bank Nifty might break out from this particular falling channel. So any dips should be used as a buying opportunity. Now here you can see RSI is also with positive signals in the comfortable zone. And one thing I would like to highlight, that many heavyweight private sector banking stock had started gaining momentum, which is clearly indicating that those stock will push the Bank Nifty on the upside. So definitely, Bank Nifty looks positive at this juncture. Any dips should be used as a buying opportunity. So friends, now let us discuss the supports and resistance level in Bank Nifty. The first support in the Bank Nifty is placed at 45,271. Below that, the second support is placed at 44,859. Third support is placed at 44,638. Whereas on the upside, the first resistance is placed at 46,050. Second resistance is placed at 46,306. And third resistance is placed at 46,892. So these are the crucial supports and resistance level in Bank Nifty. Traders should follow first half an hour to 45 minutes range breakout. Higher, one should mark highs and lows of this particular range and then trade accordingly in the direction of the breakout. But looking at this pattern, we feel that any dips should be used as a buying opportunity. Now, friends, let us discuss the derivative data of Bank Nifty calls. In Bank Nifty calls, you can clearly see the action was seen in 40 500 45,800 calls, then 46,000 calls, then 46,500 calls. Now here you can see there has been a rise in the option premium, which means that there is no writing seen in Bank Nifty calls. Implied volatility is slightly higher. You can clearly see it is between 15.87 to almost 17.56. So this implied volatility is slightly higher. There could be a gap up opening on Monday because the US markets were positive. If there is a gap up opening, one should not directly go and jump and buy Bank Nifty. One should wait for intraday dip because the IVs will go into higher range, into danger zone. We might see an intraday pullback, and then one should go long at the lower levels. But once Bank Nifty closes above 46,000, then there are chances that Bank Nifty might see an extension of rally towards 46,500 to 46,800. Why 46,800? Because you can see there has been more shedding in this particular region. You can see there has been a shedding from 45,700 calls, then 45,800 calls, 46,100, 46,200, and you can see each and every strike price, you can see the shedding. So this shedding is clearly indicating that the writers have already started buying the Bank Nifty calls, which is pushing the Bank Nifty on the upside. So definitely still there are short positions looking at this particular data, and this will propel Bank Nifty on the upside. So any dips should be used as a buying opportunity. Now, friends, let us discuss the Bank Nifty put data. The most significant part is the significant and severe drop in the option premium. There has been a rise in the open interest. There is no shedding at all. The implied volatility is between 14.34 and 18.18. So definitely 45,500 could act as an immediate support. If it breaks and closes, then only there are chances that Bank Nifty might drift down to the levels of 45,000 and below that 44,500. But looking at this particular data, 45,500 could act as an immediate and very strong support because there is a strong volume concentration on immediate levels. And as I said, the option data is looking positive. Any dips should be used as a buying opportunity. So friends, looking at the charts and option data of Nifty and Bank Nifty, the strategy seems to be buy on dips in the next week. Now friends, let us come to the final segment of our show, which is positional call. I have identified one stock. The name of the stock is Century Ply. Let me go to the daily charts of the Century Ply. The stock has recently seen a breakout. After that, it has seen a pullback. Let me go to the. You can clearly see the stock has witnessed a multi-year high. The multi-year high was a 3-year breakout from 732. After that, the stock has rallied. This was the breakout. After that, we have seen a rally towards 848, and then it has again seen a pullback. Now, the multiple resistance zone has now become the support area. RSI is also into oversold territory. It is into a comfort zone. So definitely, again, this multiple support region could turn out to be the buying range of the investors. So definitely, one should look out for this stock. Currently, the stock is quoting around 732. So swing traders, positional traders, short-term investors, long-term investors can accumulate the stock on dips to 722 to 720 for an upside target of 795 to 800 in short to medium term. Short to medium term means in next 3 to 4 months, the stock has potential to test the level of 800 mark from these levels. So again, investors, short-term investors, long-term investors, swing traders can buy the stock on dips to 720 to 722 for an upside target of 800 in short to medium term. So friends, now let us conclude the show. Thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.